Good morning, everyone, and welcome to the European crossover webinar. And we should be seeing Italian industrial orders come out, but nothing yet I'm seeing here at this time. Later on at 8:30 Eastern, we will have Canadian CPI. And at 9 a.m. Eastern, we'll have monthly U.S. monthly home prices, as well as Eurozone consumer confidence flash number. But we still haven't, for whatever reason, we still have not seen this Italian data hit yet. So once again, Italian industrial orders supposed to be out at the top of the hour, or right where we are now. Nothing has come out yet. And Canadian CPI, as I mentioned, at 8:30 Eastern, followed by monthly home prices at 9 a.m. Eastern, that's US. And then Eurozone flash consumer confidence at 10 a.m. Eastern. Let's move this out of the way. You had bias chart resistance yesterday at par 45 here in the dollar index. It got up to par 47. We've kind of weakened back just a bit. And we'll take a look at with indices. A bit stronger in here. We did come down to that 27.16, which is a key level. We even mentioned here in the chat room yesterday, and they finally did make it down there. You can see here. It's a key level there. So we'll get a little bit of a bounce here. See how much further this can go and take us. Well, 27.81 will be the 38%. And before we get there, we do have a little bit of resistance coming in right there, which would be 27.73. Basically call it 27.74. And corresponding bounce here also in the NAS also. We'll go and take a look here at the crude oil. Now I do see here that the CME raise margins by 13% in crude oil. Actually, I'm looking here at the July. Here in the June, they've already made it down here. Look at that. They've already come down here to $10 and looks like 35 cents, trading 11.48. Through the July up there, just to get a little bit of a broader look. And July's trading at 19.24. And take a look here at gold. Gold has bounced a little bit, actually from a level that we already had in place. I haven't paid that much close attention to it, but you can see here, and we found support. Looks like about, what, 1665, 1666. Decent little bounce over that, too. With that, we'll go on and jump into the news. So the Australian dollar saved by data surprise, but oil a drag. The Australian dollar bounced from a two-week trough on Wednesday as surprisingly strong retail sales at home helped offset the risk aversion globally and prompted a bout of short covering. The Aussie blipped up 4 tenths to 63.14, having slipped 8 tenths overnight to come as low as 62.54. Briefly reached as high as 63.54, but could sustain, probably make to say, could not sustain the rally. The New Zealand dollar stayed at 59.73 after dropping 1.1%. Both have been under pressure as a drastic slide in oil prices sparked speculation that some investors, companies, and countries might have to dump other assets to cover their losses. The Aussie then got a timely lift when preliminary data showed Australian retail sales surged a record 8.2% in March as the coronavirus lockdown sparked panic buying of food and staples. The sale of the increase was far beyond expectations and wrong-footed bears, though analysts were quick to emphasize that the sales likely tumbled back in April as businesses were shut. Indeed, RBA Governor Philip Lowe on Tuesday warned economic output could shrink 10% in the first half of the year, easily the worst since the Great Depression. Low said interest rates were likely to remain at a record low 0.25% for the year. And reiterated the bank's commitment to buy as much bonds as necessary to keep the three-year yields near the cash rate. The RBA has actually been able to sharply scale back its bond buying as private demand for Australian debt has been more than strong enough to keep the rates low. It's been our view throughout the volatility of the recent weeks that there's little fundamental reason for bonds to push significantly higher, wrote analysts at Westpac. We expect the 10-year ACGB yields to trade below 1% on average for months to come, they added. We see the Aussie 10-year bond yield spread as consolidating around 20 basis points and would recommend fading any supply-led widening over the coming months. And thanks, Pedro. Thanks for letting me know. I just cleared my throat, so I'll go over this real quickly. The U.S. Crude crash kept the dollar in demand. The dollar held broad gains on Wednesday as the U.S. oil returned to positive territory from its historic plunge, failed to calm market nerves, while the Australian dollar jumped on record sales figures. The greenback sat below a 2 week peak against a basket of its peers and barely budged against commodity currencies whacked by an oil collapse. The safe haven yen held at 783, while the Aussie dollar was a gain to 63.54, following a record surge in retail sales. I would treat the number with caution because, like elsewhere, there's been so much panic buying of toilet paper and other things, said National Australian Bank FX strategist Rodrigo Catril. We'd fade the rally, he said. Elsewhere, the stabilization in oil prices gave only a small lift to the sensitive Russian ruble and Norwegian krona. The bears are certainly getting the upper hand, said Chris Weston, head of brokerage firm Pepperstone. The greenback has gained 6/10 this week on a basket of currencies and stands near multi-week highs hit on Tuesday. The euro remained range bound at 8.56, while the British pound held near a 2 week trough after gloomy assessment on Tuesday of recovery prospects from the Bank of England. The recovery of U.S. crude lifts it out of negative territory, but a little over $11 a barrel is still some 80% under the January's peak of creating energy consumption due to the coronavirus lockdown and creating a supply glut. The plunge has soured appetite for risk and seems to have halted a rebound in stock markets as investors brace for a longer and slower global economic recovery. A return to work in the United States, the country hardest hit by the virus, which accounts for about a quarter of the almost 180,000 deaths globally, is looking disorderly as states and medical experts clash about the best course of action. Even Singapore, initially a case study in its successful suppression of the new coronavirus, has extended its partial lockdown by a month as it struggles with a sharp rise in cases sweeping through cramped worker dormitories. Australian Central Bank Governor Philip Lowe said on Tuesday that the country is likely to experience its biggest contraction in output since the 1930s and that a quick return to business as usual should not be expected. The fail in commodity and equity prices and a positive signal market participants expect the world economy to remain weak on some time, even though lockdowns are eased. We expect the weak world economy to bear down on the Australian dollar and for the Aussie to oscillate around 60 cents in coming months. We are seeing the S&Ps push up right now to 2762. We'll take a quick jab there before we get into the charts once again. So earlier, someone had asked about what was the resistance for the NAS. I'll just pop that up, and I was saying, well, we've got 85.80 and 85.80 and then 86 even. So 85.80 would be the 38% back, but you'll see the more key area coming here, 86 even. You see here, we'll go in and mark that off actually. So we'll put. There you go. And we'll go and mark it off real quick. So we'd be looking at 86 even here, and you can see we're getting that resistance. See that coming across? And then 85 evens at 38%. Now there'll probably be a little bit right here. You see right there, you almost have a little bit of nice confluence coming in. That's actually where they ran out of gas, 85.32, but potentially we can come up to 85.80, the 38%, and this is where the real resistance comes at 86. Actually, the number comes in right there. I guess you'd call it. This is 8605, 8604. Okay, with that, and we are seeing the S&Ps move higher here. 2781 is going to be the 38%, and then you can see here that I think it's 2774. Yeah, as a resistance level. Let's go on and move into the analysis. And one last jump here in the crude oil, since I saw some comments there in that here in the chat room. So we are at 1137 in the June, and then July we've got here at 1930, and then August at 2230. Boy, it's all choppy all over the place. Look at August. Holy smokes, look up then. See that? Let's move into July. July's a little bit better. And let's go move back into June. Oh, yeah. Big difference even between June and July. Look at that. Let's go on and move into the analysis review. Sure would like to get those spoos up there. So let's go and take a look at the euro. So the euro stayed, you can see here, basically have like a, I wouldn't even call it medium leg, and I guess in regards, or relatively speaking, compared to what the ranges have been, I guess you could get, I still wouldn't even call it a medium-legged doji. It's just like a very, very small one, but you can see here, but it's still trading in a tight range. So the euro stayed in a relatively tight range Monday, unable to get past bias chart resistance at 911. You know, we had that yesterday. And not close to coming to bias chart support at 814. Both will remain intact. And I meant to say for Tuesday. I meant to say for Wednesday. I put Tuesday. But you see here, that was, oh, I actually had 871. Okay, I forgot that I had, so I guess that wasn't so bad in a way, sort of. I mean, it was 882, and we came down. But so, yeah, we'll put it back to where it was before, which is 911. We're just basically trapped in this very tight range. So 911, 814. The low yesterday was, oh, I guess that wasn't bad. The low was 816 and we had 814. And the high was what? Oh, I guess we nailed it. Oh, wow. I had 882, was it? Let me see. Oh, 871. It got to 882. Okay. So we're going to put here 911, which is from the day before. Let's go and move into the cable. So the cable finally broke lower, closing just above 2285. You can see right there. Wow, we are in a super tight range right now. Support on Wednesday will be 2217, and we're allowing for this to potentially break lower. I mean, we've already broken, and we took this dip, but I thought they may be able to probe a little bit lower. One of the things that's helping it also, if you're looking at just the cash dollar index, is with the SPOOs moving higher, and we already came to key support. You saw that in the NAS. That'll probably ease the demand for dollars. So I was looking potential we could push a little bit lower, and we're coming into here with this 2211-ish area here. But and we'll stay with that. Actually, I meant to say 2217. Resistance is going to be 2371. So giving it some room lower. And let's go move into the Aussie. Now, obviously, we saw a pretty good move in the Aussie with the retail sales. Um, the Aussie tested the lower boundaries. The pair remains vulnerable with a potential test to 62.11, but obviously we got that pop off of the retail sales. Resistance will be 63.60. High today so far has been 63.53. Okay, not bad. 63.60. And potentially move to 62.11. Obviously, the stronger retail sales allowed us to pop back up, but I know that I think it was Rodrigo Catrill. They're looking for the Aussie to go back down to 60 cents, and that would push us right back to this key level here. There we go. And let's go into the Kiwi. So the Kiwi pushed lower on Tuesday with the next likely test to be the 59.14. You can see that here. As support, resistance will be 60.10. Well, probably got a little bit of that sentimental rally. Um, the old monkey see, monkey do as the Aussie rallied. So it popped up itself. But resistance will be 60.10, and potentially we're looking for a move down here to 59.14. Because we did get this move here and just one down day. I would expect us to make it down to 59.14. So it's going to be 59.14 on the downside, not necessarily to get there today, but what we'd be looking for. And resistance, as we noted, 60.10. Let's go and move on to the dollar CAD. So the dollar CAD continued its push higher. A potential target would be 43.50, confluencing with 43.56, 61%. Immediate resistance, though, is going to be 42.97. Well, even with that, we've just kind of like, we made it up in here. You see these touches coming across here of the wicks. And I thought, okay, one of the things about, CAD is that once this thing starts to go, it can go. I mean, and we have started here. Crude continues on the weak side. You have to be a little bit careful because, like I said, we've seen these things where it can look like it's going to pause, and then it just keeps like a train going along, going along. Hence, why I am going to stick with this, which is 42.97. If nothing else, at least if you step in front of this market, at least you know where your risk level is there. But potentially 43.50, which would confluence with 43.56 to 61% of this move. We'll go on and some of y'all already probably looked at that, but nonetheless. So you can see the 61% here, 43.56. And that would then confluence with this resistance. See the bottom here and the wick here. And there's your 43.50. I'm basically 43.51. So it's, as I mentioned, 42.97 on the upside, support at 40.84. That's in case they do go and take a dip back. Obviously, right now they're looking pretty good. But if we do slip back, you can see the touches here. So we like that 40.84. A little bit wider range today. Wow. SPOO's at 27.67. $84. curious to keep an eye on SPOOs. But then again, like I said, you got to give it credit. Let me just take a quick pop over here. I just noticed that too. You see there, when we went to 2716, I just noticed that. Had a nice hammer right there. You see that? Hence why I think we've got a little bit of extra juice to go along with this move. So you got the hammer there. I would expect this to at least challenge the 2774 and potentially, this is what I thought we were going to go to yesterday. Missed a good chunk of this move down here, although well played by Dominic. I thought we could make it up to 2790 yesterday. And, missed a good chunk. I mean, it still made money, but left a lot. I thought we were going to make it up to 2790, and I thought that was going to be a great area to move lower. But once again, with this hammer bottom, yeah, we'll probably stall around here 2774. But I think that potentially we can make it up here. It's going to be like 2790 here. Anyway, let me jump back because I just want to note because we're really starting to see this thing move a little bit higher. Let's get back to the analysis in FX. So let's go and move on now to the dollar peso. So the dollar peso furthered its advance amid falling oil prices, as well as a 50 basis point cut from the Bank of Mexico. Resistance will be 24.61. Want to give it a little bit of room. You can see it kind of pause it a bit, but that's that key level, that 24.61 here in the pink line. With support going to be 24.17, followed by 23.95. So trading in a pretty tight range today, though. Probably holding here. Obviously, the weakest thing is going to be the crude oil, as well as there wasn't that much of a reaction to the 50 basis point cut. I think it was Chi was saying that right after they had made that cut. No real reaction at the time. So it's going to be 24.61. And on the downside, 24.17. Now that is going to be followed by 23.95, but we're trading in a pretty tight range today. Boy, look at the dollar yen. This thing has gone to freaking sleep. Look at that. There's no change here in the dollar yen. You can see it's just sitting here in a super, super tight range. Very interesting. It doesn't even react. I mean, it hasn't reacted as much to the downside, nor, to give it credit, it's not reacting to the upside either. So continued tight range here in the dollar yen, 792 in the upside, potential for 715, although it's not acting like it wants to get down there. We'll stick with the 715, although intraday, if you're looking at this, it would actually come in right there at 739 if you were looking at it real tight. But I don't see if there's any movement here in the dollar yen or why anyone would fool with it at this point. Let's go to the dollar index. The dollar index tagged the bias chart support before, and we were talking about our bias chart support from yesterday was par 45, and we got to par 47. Before slightly paring back. Resistance looking out is par 80. Now we're kind of pausing a little bit here, but where can this market go to? And that's why right now we're looking at potentially here, right there. You see that? Par 80. In case it starts to take off further, although it wouldn't seem likely with the way that the SPOOs are paring back Yeah, I mean, not paring back, but they're moving higher. Nonetheless, if you were saying, you know what, I'm taking on the cash dollar index, I don't care, that would be your your risk level, which would be par 80. And we've kind of widened this out today for the cash dollar index. So it's going to be par 80. And then on the downside, once again, if we were to get a move, and let's what would we be looking for? Well, we did have 99.62, although we worked higher yesterday, but potentially what we'd be looking for, if you saw this market pair back, we'd be looking for 99.53. You can see that right there. You see there? That close right there, but then right here with this close there. So it's going to split the difference, call it 99.53 right there. So we'll move this down. And we've widened it a bit here with the cash dollar index. Now let's go and move into the cross rates. Now looking at the Kiwi yen, we had this gravestone doji on Monday. We saw the same pair back, which made sense for it to go and pair back after that because, obviously we'd already had one of the things we even talked about this setup here is, the market makes a run here, we dip back, we run up here, and it ends with the gravestone doji. The potential is that we can pair back and actually come around 63.27. Now we did go in and put our bias chart support was going to be 63.78. And that's even being a little bit, this is where I think we can move to. And well, the 63.78 yesterday, not bad. The low was 63.84. We got to 78. And we had 78. But I still think we can move a little bit lower. And where's the risk level or where we can get to? It's going to be 63.68. So let's go with 63.68. I think they can go down there and probe a little bit. And then on the upside, pretty clear where that resistance would be if they were to push beyond that, which would be 64.95. Let's go into the euro yen. Finally, we got somebody to step in front of this thing. So we do have a hammer bottom from yesterday. Market is overdone. And we have seen them dip back. So what we'd be looking for is on a pullback, the market to defend that. And this is where your support would be right there. You see that coming across? Market needs to defend that. So your support would be 16.54. And actually, they made it right down to that level. 16.23. We had 16.12. So they got to defend this right here. Right there, that bar. That has to be defended. And that's 16.54. SPOO's on the highs right now. 16.54. Needs to be defended today. Resistance right here. Coming across, which is going to be 17.17. Let's go to the euro odd. We got to move into the 2-hour on this one. Although support has got to be right there. That openish area, 70, 72. We'll move into the 2-hour to get a little closer look. Actually, it could dip as low as 70, 63. It could dip. That has to hold. So let's go as 70, 63. Or if you were to get short, you want to get out of Dodge before we get to 70, 63, unless you think we're going to break even lower. Resistance, right there, that's resistance. If we were to push beyond that, probably some stops here, but this is a real resistance, 72.53. That's a long ways. So we will go with this right here, 72.32. Let's go move into the Euro Kiwi. Do a quick fib here. Seeing 2769 is going to be the 161% of that whatchamacall, that hammer that we saw at 2716. So keep it on this. And then we have confluence with 2774. So just keep it on that. Needs to defend right here. 80.59. And the upside, this has got to be right there, 82.51. And then the Aussie yen. You can see all these touches coming across here. Right there. 68.55. And to defend, right there, 67.74. And move into the guppy. Resistance, you can see all the touches coming across there. That's 33.73, which is still a little bit of a ways off. You see right here, coming across here, that's closer. 33, actually you can see it right, that's perfect. 33.36. 33.36, although we're trading in a relatively tight range. This is where they need to defend. You see right there coming across here? And they just tagged on either side of it. They took a dip below, but it's going to be 32.19. And lastly, starting odd. It looks like SPOOs are gently running out of gas a little bit. That 32.69. Remember, I said that that was the 161% right there. And they just tagged that. But it's really the NAS that's is the one that's calling the shots. Let's go and move into starting odd. We did take a dip here on those good retail sales. It's going to have to hold this area. That's going to be support 94.27. And that'll be resistance 95.46. Taking a quick look at the SPOOs again. You can see, here's what I was talking about. See, we mentioned this 2774 and 2781 is at 38%. Let's move this over here. But you can see 161% off of this wick. Oh, it's actually, yeah, it's 27.69, 27.68 and almost 3/4. You can see right here, just took the 161% of this bar. So you're getting a little bit here. And as I mentioned, 27.74. Confluence in here with 27.80. Well, no, that's what I say. It's confluence is still a little way to ways. And then the next key level is right here, 27.90. And I thought that's what we were going to go to yesterday and then roll over. And we did not. I mean, we ended up just rolling over rather quickly. But you can see we're just kind of struggling here in this area here. Take a look at it in a 5-minute. Nothing really definitive there. Even on the 1 minute, it's just that it's kind of run out of gas here with the NAS. The NAS did provide, look on the 1 minute, a nice little graystone doji. We're taking a dip here. We'll quickly move into crude oil, which is sub $11 right now. I got the wrong one. Okay, you can see here we're here at 1083. Unbelievable. That's in the June. And then you look in the July. That's 1909. But you can see it's still, just, I wouldn't necessarily say thinly traded, but pretty close to it in a sense. August, you can see that's really thin. But in the June, 1082. That's going to keep some pressure on although it hasn't impacted this boost too much. But keep an eye on that 2774 as your first go round with 27, go back, 2780, 81 is at 38%. Anyway, thanks for joining us here on the European crossover webinar. We'll see you in the chat room. And good luck trading.